Hello everyone, this is Evan from the Trade Risk here on Wednesday, March 2nd with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then walk through some individual names for the remainder of the video. Now, the bulls getting it done again today, up 45 basis points on the day and already bringing the weekly total to 2% on the week. Now, if we look at, first let's go to the daily chart. You can see we opened this week up on Monday right here, and we saw some continuation to the downside, a shakeout, if you will, and a close below this band of resistance, this important area that we've been keeping an eye on, and that proved to be the perfect amount of sort of a shakeout and maybe create just enough doubt to fuel this recent new surge higher here over the past 2 days. Now, of course, yesterday we had that ripper 2.35% to the upside and then continuing today. Now, we find ourselves in sort of a new range here. We have the 194.50 below us as our nearest big mark for support or level to trade against, and above us we now have this big old round 200 level, which seems like forever ago that we've had to deal with. Now, this is, again, these were roughly the highs here from the big drop back in August in 2015. You can also see the market finding support here back in December. So this level 200, besides being just a psychological round number, is probably going to be, it certainly seems like the target. The market wants to get up there and tag it in the near term, and then this should be a level that would give this market some hesitation, especially given how much ground we've covered already. Now, again, I don't typically use fibs and go too crazy on some different things here, but if we did a retracement, and again, I know you could put the retracement from a lot of different areas, but you can see maybe to a weekly chart might be cleaner. This 200 level coincides perfectly with what fib traders look for, the golden ratio, that 61.8% retracement. You can see right here lining up perfectly with the 200 at a prior level of influence, of interest. So all of that to say, really, we do have a couple of pieces of evidence here, technical analysis, that do suggest that perhaps we are going to see this market find some tough ground just ahead of where it is right now. I think this was sort of the easy rally in here, not a whole lot of previous supply traded in here. Price could move pretty quickly, but given how stretched it is, given some of the confluence of indicators that we just discussed, I think 200 or so could be the target, and some place that we do want to pay very close attention to what price does. Now, in coupled with that, we also have the NYMO McClellan oscillator running at some pretty extreme hot levels, last seen back in October in this V-shaped violent rally higher. That's sort of the overbought levels we're approaching, somewhere where we were in here. So just be aware of that. If you're trying to initiate long right now, it's probably not the time. It's best to sit on your hands if you've missed much of this run up, or even yesterday and today. I just don't think initiating new longs is the most prudent thing to do. So that's sort of the maybe the slightly pessimistic, bearish outlook on it. The positives, of course, is this monster rally taking out resistance, sort of day after day, and just this nonstop march higher. I think that's very positive. Suddenly, the sentiment has just completely flipped the other way, and the chances of retesting or breaking the lows we made just a few weeks ago almost seem like a very slim probability. So it'll be interesting to see how this all plays out, and it's amazing how fast markets can swing from one extreme to the other as far as sentiment goes. But, going forward, keep an eye on the big levels here that we discussed, 194.50, 200 or so. I think those are the short-term downside, upside targets you want to see how price reacts to. Take it day by day and see how this trend continues. Now, if we look at some of the other indices, similar comments apply as far as sentiment and, everything else we discussed. The levels are certainly different. IWM, notably, though, has been outperforming the SPY. We've discussed this in our previous videos for the past week or so. It has been outperforming on the upside, and it continues to do so and continues to act really well. Coming back up to 108 or so is this big breakdown level from the September range that it was in 2015 or so, or at least the double bottom, lows that it put in September, October. So keep an eye on this. Continues to act really well, getting a bit extended as well, but certainly covering a lot of ground and recouping a lot of that technical damage. That's constructive. Qs breaking above an important resistance level yesterday, 104. Today just went sideways, kind of didn't do too much, underperformed relative to the rest, but still very constructive, getting back above this resistance level. I wouldn't make too much of today. Let's just see how this one continues to play out. A lot of supply to the left of us in here. So again, it probably just needs some time, but we do want to see support hold going into the future. Now, if we look at some other markets, TLT got really hit yesterday, finally breaking through some support. The first time it's actually broken support in quite a while. We've had some small retracements, 4-day retracement, not so small, but really it was after a parabolic move higher. So today or yesterday was the first real signs of a crack and a break of support. Today recovered a little bit of it. Let's see what happens going forward here. You can see fast moving averages starting to curl over pretty quick. Let's see if that actually happens, or if this turns into some type of larger consolidation pattern. Who knows if this is some big trend reversal. Ultimately, we did see this level at around 132 or so flex its strength and contain price, as we sort of discussed a couple of times around, as seen here on the weekly chart. So keep an eye on TLT. Might have something brewing there as far as some type of bear parade. If we look at gold, continues to hold up very resilient, consolidating at highs above all the fast moving averages, looking really pent up. So it seems like it's defying gravity right here. If it starts to clear these highs, I think you really do get a fast squeeze higher, as I'm sure most people aren't positioned for it or wanting to fight this. I have no idea which way this is going to go, but certainly it's looking pretty strong here, as demonstrated by this recent price action. So keep an eye on it. Keep these recent highs, in check. I think that looks pretty interesting. Silver, not so interesting. It broke down from some support here right around 1450, and since then it's been moving sideways. Now trapped in this, kind of messy area that it's been in. I think you need to just revert back to 13 3/4 and then maybe $15 wide range, and it's just likely to chop around while it sits in that range. UNG is just continuing to get hammered. We talked about hammers the other day on Friday, how we had this kind of dual hammer going on here, that maybe we have some early signs of a bottoming, happening process. That of course didn't really happen, as we came in Monday and then just continued to trend lower. So everything looks pretty horrible here. Nothing really has changed though from the bigger picture, as it's looked pretty horrible for quite some time. USO making some positive traction today, still range bound. I think this is all par for the course here. I think 960 or so, 975. That's the upper bounds where you want to keep an eye on things to see how it reacts up there. I think maybe it does have another 50-70 cents of room here in USO, but looks range bound, bottoming process perhaps. That looks sort of constructive here on a short-term basis. So let's see how that one acts going forward. Now, if we look at some of the sectors here, I think XLF here, notably, this again, this really should be paid attention to and given some of the credit here to the recent surge. But XLF again, these were the really beaten up laggards, financials into the beginning of 2016, and they are starting to recover ground. They took out some important resistance here right around 2145. So it looks like all signs point to higher right now. Again, maybe a little extended, but looks good, and I think that's certainly where you're seeing some strength come in. Energy, of course, today looking real good, breaking out above 58.50, which has contained price for the past several weeks. Industrials continue to act well. Technology continues to act well. There's a lot that's starting to act well. Utilities had a pretty wide-ranging day today. I'm not sure what went on there in the morning, but testing all the way down to 45, recovering, closing at the highs. Certainly interesting there, but still holding on to that $45 big breakout level that we saw back in late January. So keep an eye on that one going forward. But those are some of the top sectors to keep an eye on. If we look at some of the individual names, let's go down the list here. Apple is back above that $100 level, held this support successfully at 93.50. That's a win for the bulls. Now it's coming into some of the highs here from 2016 from January at 101. Let's see if that contains price again. Maybe we get a range to develop here over the next few weeks. I think that would be healthy, constructive for Apple. But right now, fast moving averages, bullish alignment, things look good. Google, not as positive maybe as Apple as far as the short-term price action. Of course, Google relative to Apple is near its highs, closer to its highs. So it had a nice day yesterday, just went sideways today. It's looking constructive, trying to build that base out, trying to build that supply in. Looks like it may need more time, but certainly the path of least resistance higher at this point, 750 or so, maybe a near-term target. Amazon continues to V-shaped higher. I think this pattern would certainly, in my opinion, frustrate the majority, just as it ascends higher in this very steep trend. Almost looks like a bear flag, but yet keeps grinding higher. I think that's a difficult pattern, and who knows, maybe it continues all the way to 600 plus. Amazon above all the fast-moving averages. Looking good here, although it is an interesting pattern. I would like to see more filling happen, but it's marching higher and it's tough to fight it. Facebook took out this important area, 107.75 or so, 108 really. Again, similar to Amazon. Look at the way this is grinding higher here, but it's a stone's throw away from all-time highs up here at 115. So perhaps it gets there in the near term. Twitter starting to act well recently. We talked about this level of resistance here, right around 1875 or so. Looks like it's trying to bump its head up against it again, so that is constructive. The more times we can try and hit that resistance level, the more likely it is to break through on another attempt. The fast moving averages are pointing up, bullish alignment. I like it. Still, a very beaten down name in the long term, so we'll have to see how this one acts going forward. GoPro, this one's starting to take shape, 10% up day. Maybe needs to fill this gap in here. Maybe it does in the near term, but it is starting to carve out a somewhat positive looking bottoming pattern here. So keep an eye on that one going forward. And then Tesla, I know this one's been it's been bounced around in the news a bit here. V-shaped rally again, all the way from 140 all the way up to 196, trying to get back above that breakdown level. This band of what was support doesn't look to be acting as some stiff resistance just yet, so we'll have to see if it can close up here for another consecutive week. I think that's what you'd look for, if it can close up here for a second consecutive week. So keep an eye on that one going forward. And I think that's it. I think that's all I have for today. So good luck out there. Hope this rally has been good to you. And as always, thank you for watching. I will catch you next time.